Hey traders, welcome to Charts and Coffee. Happy Friday. Not just any Friday, gang. It is OpX Friday. So this means options are expiring. This is going to be a game all about open interest, not really about the technicals that are in play, not about the narratives that are in play. This is really a game about how can the most number of options expire worthless. That's the game today and today only. Back to Monday, back to technicals and trends and whatever we've got. But ultimately, what we want to remember is that let's take a look at the indices first, right? So there's a lot of little shifts that can make a huge difference. They might seem minor at the surface, but remember, there's a lot of words like I think and I feel, and I try to eliminate those I think and I feel about anything regarding the market. What do I see? And therefore, what am I going to do? And if we stick with what do we see and what do we do, the S&P is in an uptrend, right? The Dow and the NASDAQ, take a peek, are also in uptrends. And then you have the Russell, which really doesn't matter in terms of the other three, but it's trying to organize into an uptrend. KRE has had a heck of a mid-October, launching itself from 55 to $60. And this is where we have a long position in KRE that we've had for some time in the Sector Secrets Mastery. It's a longer term shares position. So I'll take it. I don't have to participate in it. We're doing it in another way. Another thing I was thinking about today, and it's always interesting to see the way in which we perceive what analysis means in terms of how long might this be true. When I talk about bullish, I don't mean today, because that means that at 9:02 in the morning, I'm going to have some sort of grandiose call on whether today is going to be up or down. That's fortune telling. That's on analysis. Nobody knows. Nobody knows what's going to be happening at 4 p.m. today at the end of options expiration. I think we can all agree on that, right? So when I talk about being bullish, I'm not talking about myopically Friday. I'm talking about as I continue to look day after day for opportunities, I'll be looking for them to the upside. So case in point, there's another thing that we talk about a lot in the mastery, which is, we don't have a lot of analysis. What do I think? What do I feel? What do we see? What do we do? And that's ultimately, if you want to know what I am doing, right? What I'm thinking and feeling, what we see in the market, I'm long gold. I have to close that out today. I'm long the SPY. I'll have to close that out sometime either today or Monday. The options expire on the 21st. We're long NVIDIA and we're long PayPal. Yesterday, we closed out two winners in Cisco and an XLB. Not because I do not like those trends any longer. I absolutely do. But because I'm out of time, right? I put a quarter in the machine. XLB and Cisco did what I wanted. And now I've got to get out. Now I've got to close that position out. So Cisco, we entered at 245, ultimately scaled out at the third target, which was really a time-based target as well as price, because today is the expiration at $6.20. So from 245 to 620. And then XLB Basic Materials, for those of you that may not be tracking that one, definitely one to keep on the radar even after OpX. Got it at 235, closed the thing out at 410. That's it, right? And then I'm managing these other four. And notice by the time we have, and I'm going to grab my drawing tool here. By the time we've gone to the first, where is my, oh, there it is. By the time we've gone to the first target, this is something that I teach and we've been doing for quite some time. When you get to the first target, I'll tell you, most traders, and there's nothing wrong with this, but most traders will basically get in at one level and get out at another, right? From point A to point B. And that's fine, right? If you want to do that, that's fine. That's just fair. Get in, get out. There's no scaling in, there's no scaling out. We hit the target and you get out of the trade. But, if you could think about the idea of getting in from A to B to C to D, and then at some point, you're just going to run into expiration, right? So we get in. I like to have three targets, and sometimes that third target is the expiry. as well. But I want to be able to scale out 3 times. That means a trade just continue to go in my favor. But what if it only goes to the first target? And this is something that we do where we think about how can we skew risk in our favor. We just finished doing an entire class on this. The class continues to go on. So if you're looking at your trades this week and saying, Rod, I'm not in those symbols, probably not surprising. Most traders are not using relative performance. It's easy to do once you learn the process. Rog, I'm not looking at multiple exits. Again, it's easy to do once you understand how to position size, manage risk, and learn the process. So, I share this because this is all that matters. Rog, what are you doing? What have you closed out? And in the most binary way, how are you taking advantage of the movement to the upside? We're growing accounts because the markets are moving up and we're buying calls. What we're not doing is trying to guess at a top, right? Top picking is absolutely the favored approach of traders that are not already long, right? It's the ultimate revenge trade. Now, could today be an odd day? Yeah, no doubt. Today could certainly be an odd day because of options expiration. So we'll keep an eye on that, right? We'll keep an eye on that. And then the window also opens. So yesterday, I really wasn't interested in new entries into today. In fact, I wanted to close out a lot of those trades that I just showed you there because I have to. And I'll look for more entries. If we get price action driving down towards support level again today, I will be happy to re-up and rebuild that swing trading book. We had up until yesterday 6 open swing trades. Now we've got 4 open swing trades. By today, I will have 3 open swing trades, very likely, because we'll close out our final October 18 position in gold. GC, I really liked to keep. I closed out XLB. I closed out Cisco yesterday. That's something we did in the mastery. And the idea is I'm running out of time. We have a pretty decent surge. Let's just use that. I don't have to get every little tick out of the trade. We continue to stay long gold because yesterday gold was quite strong, punched up through some key levels. So even though I'm down to I've got to be out today, it looks like we'll have a decent surge. A new weekly high, by the way, weekly chart high. Looks like we'll have a decent surge to finally close those GLD calls out at. And that's where I sit right now, right? Those are the positions that I've got. And that's the way we have to think about our trades. Where have I gotten in? How much time do I have? How many times have I scaled out? All right. Good morning. Good morning. All right. First up is, let's see, charts and coffee. Yes. Art says, thank God it's Friday. TGIF. I tell you what, I used to get so sad and depressed on Saturdays. I never knew what to do with myself. But today will be a good Friday. We'll be rigging the cash register quite a bit, closing out some trades. All right. Questions in our essential room. All right. So let's go ahead and if you have a question about a symbol, let me know. And we'll take a peek at, I do want to show you all crude oil. All right. Got a question here. Yokin, how do you handle open positions with 30 days into options expiration if they're currently at a decent percentage profit? I don't care about percentages other than a risk reward. So I would imagine you had a target getting into the trade. What was the target? I handle open positions based on the trade idea. So every trade idea that we have, you know what? I'm going to tell you how to build a watch a little bit here, but I think it's really pertinent because I think there's a little bit of thinking that we shouldn't know where targets are when we put the trade on. So I'll show you what I share with you with the mastery folks, and you can take from it what you will. Hopefully it's helpful. So this is how the trade alerts go out. All right. This is how the trade alerts go out. I want to put on a swing trade. I know my strike. I know my symbol. I know my, put a call. We know what we're going to buy. I'm always buying options, by the way. That's something else we do differently. I don't do spreads. I don't sell premium. It's long calls, long puts. All right. Keep it really simple. So I'm going to buy. This is actually an alert that went out. This is why we're long and where we're long the SPY from. So we're buying the SPY 21 October 579 call. All right. The next step is where are we going to buy that from? Right? At what symbol are we going to buy? And then where am I going to buy it? At what price does this trade become something I need to do? Right? In other words, enter. That's on it. That's on everything. Most traders stop there, right? What are we going to buy and where do we get in? And actually, I wouldn't even say that. Most traders are just, this is what I'm going to buy and not even any specificity on the price. That's only the first two steps. The third step is we know our target when we build the trade. Now, I mentioned earlier, the only time I'm actually interested in percentages is in terms of risk reward, and that is true. But beyond that, that is not the primary reason I will scale out. I think about if I'm long calls, what's in the way to follow through, right? What's in the way to follow through? Call it an obstacle, call it resistance, call it selling pressure, call it whatever you want, right? That's oftentimes going to be my first target. That's oftentimes going to be my first target. All right. So ultimately, what I want to do is know what my target is when I'm getting in. This should not be something that I figure out after. I should know that at the time of entry, right? So I'm going to imagine you had a target at the time of entry. Follow that. But what I would also say is, at what point on that travel to that level could you skew the risk reward in your favor? Right? Protect unrealized profits, protect your capital, etc. And those are things definitely to think about. As far as time goes, you got a tremendous amount of time. But as far as percentage returns, notice something else, gang. And I'm just going to say it straight up. Percentage returns are garbage. If someone says I made 60%, 50%, 100%, 100% of what? Right? Always ask that. Oh, it's 100% return on what? Because going from 1 cent to 2 cents is 100% return on an option. So it's always percentage of what? So I never wanted to get caught up. It's a silly little game that traders will play with their own minds or frankly with people that are watching them. What we want to do is say, this is where I got in. This is where I got out. And everyone is free to do the math. Say, okay, Raghee paid $245. She ultimately exited $620. That's the profit. You take that profit, you multiply it by the number of contracts, and now you know what happened in the trade. That's it. That's it, right? So I buy something for 17 cents and it goes to 34 cents. That's 100%, but really it's 17 cents. Okay. And that's why the percentage game sounds so sexy. And it's really just not how we want to think about account growth in a world where we want to take the dollars in our account and grow them to a meaningful amount. And maybe that meaningful amount is paying the car bill. Maybe that meaningful amount is paying the mortgage. Maybe that meaningful amount is ultimately getting to trading for a living. Whatever that number is, I can't say what that is. But if we're looking for a number, right? We're trading for a number. Then let's just really look at it with all the relevant data in front of us so we can make an educated decision about what we're doing and whether we could do it better, right? Put the best data in front of us, and percentage is not a good data, right? So that's why I don't use percentages. A percent of what, right, my friend? Percent of what? All right. Next up is what are these? This is not new. It's just I have it running. It's called the sanity check. And this is basically how much of a percent, we're right back to the percent game, because think about this. And this is, again, this is Wall Street's game. Wall Street talks about something is up this percent. Something is up that percent. Well, that should be your first cue as far as the game around percentages. However, they now have a psychological impact, sadly, right? So if I'm looking at crude oil pulling back from an all-time high, I can also look at the high from 87. I could even adjust it to 70, whatever this was. How much have we sold off? Because remember, when we hit, say, 10, the news is going to discuss it in a very different context. 20% is oftentimes considered a crash. This might be considered a correction. And because the news has labeled these numbers as having meaning apart from being 10 or 20%, we have to keep an eye on this. So yeah, this percent game is irritating, but it is something that tends to have some psychological impact when you think about how much prices move from a high lower, right? A 5% pullback, a 1% pullback. So we call that the sanity check, because most modern financial media is just very hyped up. It's drama. And if you think about it, most things in life, we've been talking about this a lot in the mastery, you either have a math problem, meaning the numbers have to be crunched, or you have a drama problem. And remember, most of financial media wants to drum up drama. So you stay tuned, right? So keep in mind, you either have a math problem or you have a drama problem. So I want to keep it to the tangible, number crunchable math problem. So those are things that we like to keep in mind. All right. AVGO. All right. Number 3 weighted stock in semiconductors. That's a really important point because, yesterday there was a lot of concern about, and this is a really interesting tie-in to today's earnings. If I take a look at semiconductors, not all the stocks within semiconductors have equal percentage influence, equal percentage weighting. Now, a larger price move, say the kind we could see for earnings, can make a higher impact, right? Can make for a higher impact on the ETF. So a low weighted name, like say an LR, a Qualcomm, for example, lower weighted name as compared to NVIDIA, Taiwan Semi, AVGO. If it has a large price move, what it lacks in percentage weighting, it can make up for in the actual price swing. But barring that larger price swing, the lower weighted stocks have a lower impact. So if I'm looking at something like AVGO, not only is it in an uptrend, along with Taiwan Semi, NVIDIA, and SMH itself, we have really good alignment in high concentration weighted stocks in this ETF. So I like that one a lot. JRB, yeah, AVGO is absolutely one. Now, when I say I like it, let's go back to what that means. Like it means I'm bullish, and if there's a bullish setup, I'll buy it. I'm not talking about liking it just for today. I'm not talking about liking it from where it is right now. But what I would like to do is set up a bullish play on that stock. Whether it triggers today or not, we do not know. So remember, if someone's bullish, it doesn't mean they're buying. Those are not synonymous. And if someone is buying, always remember there's that trap of, am I buying because I need to add to a losing position? Am I buying to close out a short? There's lots of reasons people buy. For me, in this case, I'm bullish. Therefore, a bullish setup is the next thing on the list. And if that bullish setup triggers, then that entry is the next thing on the list. So I like this one a lot to the upside if we get a bullish setup. I could say the same thing about Taiwan Semi. I would say the same thing about NVIDIA. And then all my cards on the table, I do have a long position in NVIDIA. So I think, JR, we're thinking the same thing. There's some nice strength in semiconductors. Let's see if we can't find some bullish setups. Now, today could move in its own way. Please know, today could move in a way unique to the way in which price action moves to render the largest number of options worthless. It could be a range-bound day. It could be a significant move if some of the higher open interest strikes are far lower than where price is right now. Those are things we can do by looking at the option chain. Very easy to do. So those are things that we want to keep in mind. All right. Let's see, Jazz. No, I'm glad XLB's been a good one for you. I'm super pleased. It should be one of a handful, right? I'm super pleased about that. And my pleasure. So, let me just finish that thought. So now we understand the weighting. So there was a lot of consternation about Netflix yesterday. Right? Oh my gosh, Netflix earnings. Number one, Netflix is not high concentration weighted, right? There's a lot of other stocks that are higher weighted than Netflix. So the only way that Netflix has a disproportionate effect on the NASDAQ, right? Forget XLC. It's a piece of the XLC, which is a piece of the NASDAQ. The only way Netflix has a disproportionate effect on the NASDAQ is to have a large price move. And I'll give you an idea. You might say, Rog, what's Netflix weighted within, say, the QQQ? Forget the XLC, and we'll wrap it up here. I'm looking at QQQ, and I'm looking at Netflix weighting. Again, it's not an insignificant stock, but my gosh, it's not that important either. This is less than 2% of the NASDAQ, 1.97%. Well, Rog, what does that mean? Well, I'll give you an example. Apple is about 9%. NVIDIA is about 8.5%. Microsoft is about almost 8%. AVGO is just over 5%. Meta is 5%. Amazon's 5%. And here's Netflix at under 2%, 1.9, whatever it is, right? Netflix has to have a disproportionate price move to have an impact. So this thing of, oh my gosh, Netflix earnings, it's not as important as a lot of other names in front of it on the list. So keep that in mind, gang. There's a narrative that gets strung around because most people are not looking to solve a math problem. They love the drama. And believe me, we're not lacking for drama in the financial markets. But if you say, wow, are they solving a math problem or are they creating a drama problem? You're going to see 90% of conversations about financial movement and stocks, ETFs, currencies, whatever, the financial markets. They are drama. It's a drama problem. So bring the math in, kill the drama, grow your account. That's the game, right? Thanks as always for being here for Charts and Coffee. And I'll see you all on Sunday for the top tier outlook at the Simpler Trading YouTube channel, as well as my YouTube channel at Raghee Horner. All right, gang, be good to each other.